welcome to Cap Classes. So it's been a long week. Anyhow, today I'm starting with a series of solving the illustrations of paper 1 accountancy in the CA intermediate syllabus. What I'm going to do is solve all the illustrations and the practical questions given in the ICAI study material of accountancy. So I hope this series will be useful for you, and please do let me know in the comment box whether you need these types of series or not, so that I can think of continuing it or stopping it. So the first chapter which I'm going to start with is Departmental Accounts, chapter number 12 in the ICAI module. So let's start with the video. So in this video I'm going to solve the first illustration of departmental accounts. So let's have the question. It's a simple question and just a basic question relating to departmental accounts. So the question is, goods are transferred from department P to department Q at a price 50% above cost. 50% above cost. If the closing stock of department Q, that is the receiving department, is 27,000, and we have to compute the amount of stock reserve. So if you don't know what is meant by stock reserve, it means the hidden profit. So let me explain this question for you. So here a transfer, interdepartmental transfer is being occurred. Department P of an organization is transferring goods to department Q. P of an organization is transferring goods to department Q. So the department P is transferring the goods at a price of 50% above cost. That means cost price plus 50% profit. This is at the price at which they are transferring. The transfer price is cost plus 50% above cost. This is how department P is transferring goods to department Q. However, department Q has not sold the goods yet. It is lying in the closing stock of department Q. So this profit component, this 50% profit component is still lying unrealized in the closing stock of department Q. However, we know that unrealized profits cannot be. We cannot anticipate any future profits. We know it is against the accounting concept. So what we are doing is we are reversing this, or we are separating this 50% profit from the closing stock, and this hidden profit is called as the stock reserve. So in order to separate this from the closing stock, first we have to find out how much this stock reserve is. So let's compute this. In second. So we are going to compute. So we are going to compute the amount of stock reserve. It's quite a simple calculation, and it's just a basic illustration. You don't think these types of easy questions will come for the CA intermediate exam. It's just a basic calculation for you to understand how to calculate these closing stocks. That's it. So what we are going to compute is the computation of the amount of stock reserves. Computation of the amount of stock reserve. So the data given in the question is only the closing stock of department Q, the receiving department. So the closing stock of department Q. Closing stock of department Q is given, which is 27,000. For example, let us assume that the cost price of the goods is 100. If the cost price is 100, then the department P has transferred goods to department Q at 50% above cost. That means at a profit of 50% on cost, which is 50. So the profit would be 50, and thus the selling price or the transfer price, we cannot say the selling price, transfer price will be apt. So this transfer price will be 150. So the closing stock of department Q contains these transfer price. The closing stock is recorded as this transfer price. So this 150th portion is 27,000. So if 150th portion is 27,000, then we have to find out how much is the 50th portion. Just do a cross multiplication and you will be there on the answer. Okay, let's understand. Department P has sent goods to department Q at 50% above cost. So doing this cross multiplication, we get 27,000 into 50 divided by 150. So therefore, 1 second, I think it got stuck. Okay. So the amount of stock reserves is 9,000. So this is the value of the stock reserves. So I hope you understood this point. It's nothing, just we are finding out the hidden profit which is present when we transfer the goods from department Q to department P to department Q, as it is lying in the closing stock. If it is sold, then no problem, the profit will be realized, but as it is lying in the closing stock, it is an unrealized profit, and thus we should understand and separate this unrealized profit. So this was the computation. I hope you understood this, and in this video I am going to solve only illustration 1. I'll be posting more such videos very soon. So please do let me know in the comment box whether these videos will be useful for you, and please let me know your suggestions. So that's all for today. Thank you so much. Bye.